Terrific. Closing out our panel discussions, it's my privilege to welcome to the stage Brian Bandell as our moderator. Brian is a senior reporter at the South Florida Business Journal. His main beat is real estate, and he also covers the business of law and the business of education. Brian has won more than 25 awards in his journalism, including recognition for the best business reporting in Florida. Thank you for being an advocate of our real estate sector, Brian. Enjoy the channel. Oh, I'm sorry, I'm looking around here. Welcome to the stage, Brian.
Hi, good morning, everybody. It's still morning for a little bit here. I am part of South Florida Business Journal, which is owned by American City Business Journals. Many of you around the country probably have an American City Business Journals paper in your market, so I'm a great representative of that chain. Let me introduce our panel. I think you know many of them already, but Jeremy Larkin from NAI Miami, Jeff Allman from NAI Suncoast, Joe Gallaher from NAI Fort Lauderdale, and Greg McNutt of NAI Skyway, which is Tampa. So let's get rolling with our first question. There are a lot of big real estate trends around the nation that are impacting different markets, but what trends are unique to Florida? How is Florida different from the rest of the nation here?
I would say the biggest impact is migration into Florida. In 2022, depending on who's talking, there were over 440,000 people that moved to Florida. They're all driving in front of me in Tampa. But that is going to impact us. Our tax base grows, our needs for residential units then drives our needs for all manner of commercial real estate.
Yeah, I would echo what Greg said. Definitely the incoming population to the state, and then I would say another trend has been insurance. I'm sure we've all been experiencing that lately. In our market, which is Martin County and St. Lucie County primarily, we've seen, in some cases insurance rates triple, which is really starting to affect, underwriting on sales deals, and then also trickling in to the tenant side where, CAMs are increasing by, $3-4 on insurance, and then you also have, sales that have occurred over the past few years that have increased the taxes as well. So, yeah, it's another trend we're seeing.
The other thing you've seen is a compression of 10 years of growth pattern into 2, and supply trying to keep up with that has been crazy. A lot of the New Yorkers came down, found very big bargains in housing, and bid the prices up like there was no tomorrow, decided to stay down here. Financial firms have been moving down here in great quantities, and unlike the rest of the country, we've got high occupancy in office, high occupancy in retail, and high occupancy across the board.
I really have nothing else to add to that. Yes, we've had the increase in office occupancy because of the influx of people coming into South Florida, which has helped insulate us from all the big office issues that you hear nationwide. So even in the tertiary markets and the secondary markets for us, you see office vacancies that are really low. But that also goes to retail, that goes to land prices, that everything is related to it too. So we have a lot of activity that's sustained.
Yeah, it's interesting because in a lot of parts of the country, office is a 4-letter word. Mm-hmm. I mean, they're struggling. A lot of downtowns in San Francisco and Chicago and New York, there's a lot of office vacancy and fear about what's going to happen. And here we're kind of avoiding that, right? For the most part, the offices are pretty full. And in places like Brickell, the rents are really getting jacked up.
The rents are hitting $150 a foot. But what's more interesting, there have been 2 major office sales in the last 3 weeks. I think 801 Brickell sold for like $250 million. And then a property down in Alhambra Circle sold, I think, in the $85 million range. Well, and the Greenery down by Dadeland sold for, I think it was 55 million. I'm not sure, I don't remember. But they all just recently have turned over. And in this environment, you're not supposed to be seeing a whole lot of sales, but there's at least $300 million office transactions in the last month.
Yeah, and on office development in the pipeline too, which in most cities it's unheard of. They're thinking we need to turn office into residential or something else, and you're like, no, we're building more office. So that's different. But what national trends are still impacting Florida that we can't escape from, that are still hitting our market?
I would say, going back to insurance, I mean, that has just been the biggest thing that we've been dealing with right now. Insurance has really been impacting all of our deals, from sales to leases, and in some cases, really, causing the market to go a little bit sideways depending on the asset class at the moment. But I would say that's our biggest hurdle right now.
Urban core issues, you've got unaffordability of housing, both rental and to buy, and traffic congestion. I mean, as much as they've done a lot of major improvements and they're trying to get the mass transit going, trying to get around town certain hours of the day is not fun.
Yeah. Well, I'm trying to think of like the things that are impacting us nationally. Obviously, interest rates are a national issue, but also, I mean, think remote work is sort of a national issue, and it's not like no companies are doing that. We've had a couple companies like Ryder and Office Depot do some downsizing. You have national companies like that are in like healthcare, like Humana, do downsizing in our market. So like, are we still feeling the impacts of some of these kind of post-COVID trends that are still, even though we're Florida and we're growing, some of this is still kind of impacting us here?
Well, one of the things that's happening around the country is that companies have been reluctant to force their staff back into the office. Florida, through COVID, had a much more different approach to business in terms of staying open. Where in Los Angeles, I think 80% of restaurants closed, and many of those permanently. We didn't see quite that impact in Florida. Construction costs are obviously going to affect development. Medical office build out, I have heard proposals approaching $450 a foot. So there's no escaping those types of numbers in terms of how much office space is going to get built and then in turn occupied. Tampa has 3.5 million square feet of office space in a sublet situation that's available for sublet. We've probably peaked out at that point, but Tampa has a very positive office as an asset class environment to landlords.
Yeah, and I would say too, we're in a tertiary market in Martin and St. Lucie County. Our office market has remained very strong. We did not really see the impact of work from home. We don't have some of the more national office users, but more your, mom and pop users, attorneys, and tax professionals, stuff like that. So we've seen that market remain very strong also too, because we don't have a lot of new development in our office pipeline. A lot of our product is 20 years plus old. To echo what Jeremy said, we've done 2 office transactions in the last month, close to $300 a foot, and we have another one under contract right now. So yeah, we've definitely seen the office market stay pretty strong.
I would also add supply chain still is a bit of an issue. We've talked about it several times a day. Cost of construction's high. Cost to borrow money is high. And the retailers and other users are obviously stepping up and spending a little bit of money to help offset that. But the problem is it's not enough to really make some of these deals happen. And especially when it comes to land, no one wants to be the person that admits that, oh, I kind of missed the boat, probably should have sold last year. So they're holding firm on their prices. They don't want it to take a loss, perceived or otherwise. So there's a little bit of a disparity there, but it's the costs are a pretty tough hurdle.
Okay. So tell me about the biggest challenges that you're facing, particularly in closing deals. We've all kind of seen the numbers, and the number of commercial real estate sales have been a lot lower this year. Obviously, interest rates is one reason. There are probably some other reasons as well. But when it comes to closing deals, whether it's purchases or kind of development deals. What have been the big hurdles, and kind of how have you been approaching trying to overcome them and get some stuff done?
From the development deals, land-based, is getting the entitlements done on a timely basis, and timely is 18 to 24 months, maybe longer, and just having to go and continue to push the public officials to get the need done. And unfortunately in Miami, we've also seen making sure they don't get indicted before you get your entitlements.
An issue, yeah.
And then developers can't, I mean, the second panel you heard, pencils are down. It's not just construction costs, the capital stack, the borrowing, the equity requirements have taken most of the developers and put them on the sidelines. And then, because we're in this wonderful tropical environment, we have hurricanes, the windstorm insurance is like the icing on the cake, that if they're coming in from out of town or from other parts of the country and they don't know about what windstorm insurance is doing down here, that would be like the final straw to try to kill the deal. And you've got to figure out sometimes ways around it, how to manage it, et cetera. And there's a lot of creative ways. But if you have specific lenders that are making requirements that kill the deals are dying.
And the margins with that are so razor thin that any hiccup can be a huge change in whether or not you're going to proceed with the deal. I mean, just one case, if you're talking about underwriting a project, a development project, and you had expectations of being able to get wetland credits, wetland mitigation credits for a certain dollar amount, that could turn so quickly because it's not readily available to find credits for development. So your swing on a one credit basis could go from 30,000 to 500,000. So it's tough to budget that and keep your profit stable when you have that volatility.
One of Tampa's greatest challenges is it being seen as a valid investment environment. Tampa's the third largest city in Florida. Hillsborough County is the fourth largest county in Florida by population. But in terms of considering Tampa as an investment opportunity, if you look in your book, Tampa is not shown. And so institutional investors have never really contemplated Tampa the way that they have Orlando and the way that they have, the Miami-Dade, Fort Lauderdale, East Coast of Florida. And so that poses a challenge for us.
Yeah, we do a lot of land on my team in Martin and St. Lucie, and I'd echo what Jeremy was saying. And so a part of what our team has done to kind of help mitigate some of those time constraints is offer entitlement services as a part of what we do. So in the very beginning, we'll put together the right engineer we think for the project, the land planner, engineering, traffic, everything, and really try to push that forward at a faster pace. But the timing and the underlying underwriting has definitely caused some constraints on the land side.
And I would quickly add to what he said is that landlords have a very difficult time granting to their tenants the amount of time that it will take them to perform their due diligence, to get their designs prepared, submitted for permitting, review, and approval. It's 6 to 9 months in Hillsborough County, Tampa, if you're fortunate.
Yeah, I mean, it sounds like the cost of development insurance are so high, it only kind of makes sense if you have a project that can generate a ton of revenue, like a super Class A office in Brickell, a condo starting at $1 million. It's almost like the mid-market stuff is very hard to get done, it sounds like, because it's almost like, the land costs are higher in South Florida, but the construction, compared to, Tampa and the Treasure Coast, but like the construction costs aren't that much. You're still buying concrete, you're still paying labor. So, if your rent is lower, it's a lot harder to make the numbers work, it sounds like. Also, I wanted to know, tell me about what are the best overlooked opportunities in your market for real estate investors?
We'll start with industrial, moving back into the inner core. And we watched years ago when would get taken over. Everyone jumped into Allapattah. Now they're moving more west into Allapattah. So southeast Hialeah for industrial, which puts you between the airport and the seaport, is, I think, a natural for a lot of purchase, demolition, and reconstruction. I believe the first vertical warehouse is being built in just east of the airport, and I think you're going to see a number more vertical or multiple story industrial projects there. Retail-wise, it's hodgepodge of either going down into the tertiary areas of the county, down into South Dade, et cetera, or buying and redeveloping beat-up old retail and turning into new retail.
CoStar prepared a report for the Tampa market. If you find my email, send me an email. I'll be happy to provide that to you so you can get a sense of where the investment opportunities may be best in the Tampa market. Industrial, we have a 12 to 14% increase in rates year over year. We've delivered, there will be about 10 million square feet of industrial delivered in the Tampa market in 2023. Retail has always been underrepresented as a class in the Tampa market. I don't know how long ago typical rents where your office is were at $40, but the margins of the Tampa market are now $40, $42, $43, $44 for new construction. And I know that, you know, there are a lot of you that have seen that for a decade now, but we have just gotten over that hurdle of $40 rents. Are you out of your mind?
I would say in Martin and St. Lucie, in Martin we delivered 1 million square feet of industrial last year, big box, and in St. Lucie it was about 3 million square feet of big box industrial. In St. Lucie we'll have another 4 million coming online between this year and early 2024. And I would say probably one of the bigger opportunities is in the smaller bay warehouse. It's been somewhat neglected from a new development perspective, but the demand has really kind of outstripped the supply. We're seeing rates in Martin in the low 20s for flex space, and then up into St. Lucie at 16 per square foot. So it's very low vacancy, around like 2-3% on the smaller bay product. So I would say that's where a lot of the opportunity is.
I play in a lot of the same markets as Jeremy does, so I've learned today to start talking first before him. But I will add a couple places too. There's some urban core markets that are really wanting of workforce housing. I think with the county initiatives and their assistance and Live Local Act, I think there's a good opportunity to maybe fill in some of those gaps in a less sexy neighborhood. I think there's good opportunity there, in addition to the ones that Jeremy had already spoken about. And I'll throw in Monroe County in there too, depending on y'all's perspective of sea level rise and when that's going to happen and how that affects prices. But Monroe County is somewhat ignored because it's not because of the high barrier to entry, but because it's so unknown. There's a lot of requirements that make people a little bit hesitant to invest in that area because they're not sure what they're going to fall into. But I think Monroe has some opportunities too. On retail mainly, housing is a little bit tough though.
Like redeveloping some of the retail in Monroe, maybe making it a bit more modern, you mean?
Well, that's tough too, and Monroe is going to require or wants you to also incorporate some workforce housing in any kind of redevelopment project. But redeveloping in Monroe County is really tough too, because if you're going to redevelop, now you have to raise your building elevation considerably higher. And going back to the previous point about having a razor-thin margin already, if you're going into Monroe County and you don't incorporate into your budgeting or your pro forma the cost to elevate it, which could be pretty substantial, you're going to be on the wrong side. Now there are retailers that are looking down there, but the cost is high, so you kind of want to keep the building as is if possible.
Yeah, that is actually a good point I want to follow up on. How much are investors looking at the infrastructure of the roadways and everything when they're buying a property? Are they looking at, do I have to raise the road? Is there flooding when there's a heavy rainstorm here? How vulnerable is this to sea level rise and all that? how good are the pipes? Because we've seen in Fort Lauderdale, there's a luxury condo in Las Olas that has had a boil water notice for like 24 days. I mean, there's some cities that just have old pipes that fail. Like, how closely are developers looking at all that stuff to see if what's around their project is going to be sustainable?
The good ones are paying attention. Homestead in particular, there's a water moratorium. So there's a senior living facility that's on hold. There's a bunch of retail projects that are on hold. There are restaurants that can't get open, leases that had to be dropped because the infrastructure in that particular district of Homestead wasn't equipped to handle the growth that's happened down there. So there's initiatives for improving all the infrastructure that is needed for the growth that's coming in now and also into the future. But that's part of it. Again, I touched on wetland mitigation earlier. There's also, if legislation passes, there's going to be an incorporation of water quality mitigation that developers are going to have to listen to, which is going to require heavy filtration of groundwater, which again is another added expense, and not understanding that fully could be a problem.
Okay. All right. Is there anyone else out there who has any questions before we close? All right. Well, thank you. Let's give a big hand for our panel.